Alright, I'm going to make a short video for you on basically how fast you're going to be able to flip through stock charts as soon as you know what your method is. The very first thing you're going to have to identify is what kind of trader do you want to be and what kind of trader are you. Are you a day trader? Are you a swing trader? Are you a long-term investor? Do you do options? Do you do shares? Do you buy long? Do you short? I have tried everything, and for me, swing trading shares is what I do. I mean that's where I'm consistently profitable, and it's not so much the big wins. It's your consistent wins, because you can have one big winner, seven small losers. Next thing you know, you broke even and you've wasted your time. So what I'm going to start off here with is a technical scanner. I prefer to use fundamentals, but I also use the scanner whenever my fundamentals aren't showing good setups. So what we're going to do is we're going to use this the scanner that I made. I'm going to hit scan. There are 229 stocks in this scan. So what I'm going to do is I'm going to filter by percent change, and over here under your watch list you can bring up personal scanners that you have made or downloaded, and you can link it to your charts. So I'm going to go with stocks near a 20-day high, and this stock right here for me would be that would be either a watch list or a buy. It's got a good solid uptrend. The 20-day simple moving average is over the 200 and crossing the 50, or has crossed over the 50. So I would consider that a potential buy, as long as volume followed or confirmed. The only thing that has me worried right now is we are approaching earnings seasons. They have earnings really soon, so just keep stuff like that in mind. Going down the list, I don't like it. It's sideways. Keep going. Right here, I would like to see that over. This one right here, I would actually consider taking a risk and purchasing to get toward the 127 price, with the understanding that it may not break that 127.40 price range, and understand that it would potentially be rejected. But my risk tolerance may be different than yours. You might want to wait to see if it's going to break 127.39 before entering long in that position. Right here, I like the solid uptrend that it's had over the last few weeks. Looking at the RSI down here, I'm actually going to remove one of these studies. The RSI is up kind of high. This is 65 seems to be an area that it gets rejected. Just keep that in mind. Let's see. I gotta see Amazon. I gotta see Amazon get a little bit more strength behind it before I would say that that's a buy. However, being that I have a different risk tolerance than some of you, I would consider going ahead and purchasing Amazon for the retest of the 3,552 price range. I would consider that a buy just by looking at it. It's at a 52-week high. RSI is up. The MACD is up. We'll talk about the MACD in just a second. I'm just showing you how fast I'm flipping through these charts. Cake. I actually already have a position in it. I actually bought it, I think, Tuesday. Let's see. Yeah, I think I bought that Tuesday the 6th. I think this will be a good opportunity for us to go ahead and zoom in and take a look at why. So I drew a horizontal resistance here. The 20 and 50 day simple moving average is over the 200 day simple moving average. The MACD histogram crossed over and is pointing up. RSI is pointing up. Volume is about average, maybe just a little bit above average, but I'm going to say average. So there's no trigger to say, hey, no, don't trade this right now. So I'm going to zoom back out to the 1 day, flip down to the next chart. This one fell out of the channel. That's a watch list for me. It's not necessarily a buy at this moment. I would like to see what it would do Monday by about 10:30 a.m. before I consider it a purchase. Don't like it, so I'm going to skip it. And it looks like it has already passed earnings. Well, since it's already passed earnings, I'd probably watch list it, and that would be it. Colgate, definitely a buy for me for a long-term investment portfolio. I believe it's a dividend aristocrat, which means it's paid dividends religiously for the last 25 years. I might be wrong on that. I'd have to look that up. But you know, you got to think toothpaste, deodorant, personal care products, laundry detergent, dishwashing liquid. I mean, this is one of those stocks that even when people are cutting back, they still purchase products from these people. I don't like this one right now because of where it's sitting. I don't like this one at the moment because of where it's sitting. And I don't like this one. I don't like this one. And what I'm looking for, we'll go back to, let's see, let's find it, let's look at this one. So yeah, it has touched, rejected, touched, rejected. It came up, broke that resistance point, and made a new high. Over here, this one's just trading sideways. You know, it's in a channel right now, consolidating, whatever you want to call it. So that's why I don't like it. This one right here, you know, it looks like it's got a large W pattern here. So we got down, up, down, up. It might break, it might not. That's a risk you have to take. So this one right here, you would want to draw horizontal support and resistance lines. So let's just go ahead and do that. So the next resistance is in this area of about 64.75, give or take. So you'd want to be cautious in that area if you have a low risk tolerance. Then we're looking at 67.80, give or take 5 cents there. Let's see, Amazon's already marked up. Here we go. This one's at a 52-week high right now. So what we would do in that scenario is we would take one way of potentially doing this is look at the difference between this low and this high dollar-wise from close to close. So we're looking at 359 on the close, looking at 376 on the close. So about a $17 difference. I'm not going to say expect it to run up another $17, but you could potentially say, okay, I expect it to run like another $17. See, I've already drew my support and resistance line right here. Looks like it's at kind of a questionable / weak resistance line right there. It's got 1 touch, 2 touch, 3 touch, and almost immediate rejections. So okay, well, it's a little bit stronger than I thought it was. 1, 2, 3, 4, 5. So if it breaks, it could potentially really take off. Once again, you're going to want to know your supports and your resistance. But the point of this is, if you know your method, if you know you're going to be trading on the daily, like I do, and you know you're going to be trading shares like I do, you can draw your diagonal or horizontal support and resistance on the charts. You can even eyeball it without having to draw these lines. You hit your scanner, you bring it over here to the swatch list, you link them together, and then you just scroll down, finding a reason not to trade it. And if you feel like there is potential there, you will eventually get to the point where you can just eyeball the horizontal support and resistance, or diagonal support and resistance, like right here. And obviously I'm not drawing that perfect, but you get the idea. There's a channel right there, and it's uptrending, but it's going to uptrend, and then you're going to potentially have issues right here at that horizontal. So once you get your method down and you know how you want to trade, what you want to trade, your trading plan could take you less than 30 minutes to set up per day or per week. For me, it's 30 minutes on Sunday and then like 15 minutes every day, or every morning before the market opens. And that's just kind of a quick insight. YouTube is limiting us to 15 minutes now.